All right, well, let's kick it off with the list of top 10 stocks you need to watch out for today. Tata Consumer is the first one on our list. Mangalam is here to tell us how the numbers look. Mangalam, over to you.
Good morning. So Tata Consumer was actually a mixed set of numbers. Where the disappointment was on the revenue. The company reported a revenue growth of around 8.5%, and the India business actually saw a revenue growth of about 10%. The EBITDA was a lot higher than street expectations. So the street was working with a number of 600 crores on the EBITDA. The number that the company reported was 630 crores. So revenue miss, EBITDA was positive. The net profit was impacted by a 215 crore exceptional expense. The India revenue, which grew about 10%, grew on account of the food business, which grew by about 20%, which was better than street expectations. What did not do well for India was the beverages business, which grew just about 3%, as against expectations of 9 to 10% growth. Apart from that, the international business, the revenues grew 7%, margins expanded by about 270 basis points. That was again a big positive. On the other hand, NourishCo, the revenue grew by just about 13%, as against expectations of over 30%. So on either side, there were both disappointments as well as positive surprises. Expect the stock to see mild red in today's trading session. Thereafter, what happens in FY25, the management commentary will be extremely crucial, especially on scaling up of their acquisitions.
All right, Mangalam, thanks a lot for that. So mild red to kickstart trade for Tata Consumer. But Rima joins us to tell us about Tata Elxsi. Rima, I think it'll be a darker shade of red.
Oh, absolutely. So Tata Elxsi has reported a disappointing set of numbers. The company's revenues have declined by 0.6% on a quarter-on-quarter basis. And, we don't have a consensus on it, but I was looking at the JPM estimates, JP Morgan, and they were penciling in a growth of 3.5%. And growth rates for the company have been tepid, but not negative. So minus 0.6 will disappoint the street. The problem is their media and communication vertical. So transport grew modestly, healthcare was in the green, but media and communication was down 4% on a quarter-on-quarter basis. And this is about 1/3 of their overall revenues. And the company has said it's on account of challenging, macro environment for media and communication that continues, and also a ramp down with one of their customers. Now, because of the revenue decline, margins have, come down quarter on quarter by 70 basis points, and the company has reported a drop in its profits by 4.5%. Also, Tata Elxsi is fairly expensive compared to the rest of the peers, so it's trading at a PE of about 38-40 times FY26. Back to you.
All right.
All right, Rima, thanks very much for that. So that's the one to sort of watch out for as markets start trading. Sud is now standing by. ICICI PruLife is the other one which reported numbers. And here it's a bit of a mixed picture, isn't it? So, morning.
Morning, Prashant. So yes, it has reported a mixed set of earnings. I'm going with red as VNB margin has seen a further decline, and it's because of two reasons. First, dip in non-par business. Non-par means non-participating insurance policy, and the second reason is change in commission structure for the agency channel. But company expects no further change in commissions, and competitive non-par business might see a change of trajectory here on. Coming to numbers, VNB has fallen 26% year-on-year to rupees 776 crore, and margin is lower both sequentially and year-on-year. Margin is at 21.5% versus 32% year-on-year and versus 22.9% sequentially. APE growth, which was known, has come in at 9.5% year-on-year versus company's guidance of double-digit growth. In the conference call, company says it will focus on actual VNB growth going forward. Business mix impact is negative 1.5% on VNB margin. And lastly, FY24 has been a transition year, and company expects rates to be more normalized in FY25.
All right, thanks a lot for that, Sudarshan. Well, let's go across to Vamakshi now. There are some more numbers to look at this quarter. Vamakshi, over to you.
Well, good morning, Sonia. Let me first start off with 361 RAM. This company reported a good set of numbers, much better than what analysts were expecting. AUM was up nearly 3% sequentially. The revenue was up almost 31% sequentially, and that was mainly driven by a strong surge seen in transaction and broking income. The cost-to-income ratio also improved marginally by around 50 basis points. Resultantly, operating profit came in nearly 32% higher, and net profit was nearly 24% higher. The other stock that I'm watching out for is Cyient DLM. The company reported a good set of numbers. Revenue was up nearly 30.4%. The EBITDA was also up nearly 18.8%. Margins have contracted on a year-on-year basis from 11.5% to 10.5%. But the net profit saw a huge surge of almost 80% on a year-on-year basis. MCX again is expected to trade higher today, and that is because the company has reported a net profit after reporting 2 consecutive quarters of losses. Revenue did see a downtick of almost 5% sequentially, but the standout this time around is the operational performance of the company, and that is mainly because of a sharp decline in the software cost, given that the company has now finally transitioned its core operating software to TCS from 63 Moons. EBITDA, the company report, as well as the net profit for the company is at a multi-quarter high, and therefore I expect the stock to trade higher today. Lastly, also keeping an eye out on Nelco, and that is because the revenue saw a downtick of 0.5%. The EBITDA, however, fell sharply by 12.5%, and that is mainly on account of lower depreciation. EBITDA margin also came in slightly lower at 18%, and the net profit, however, was up nearly 7.8%. Overall, expect the stock to open mildly in the red today.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's hop across to Sonal now and wind this down with some more stocks in the news. Morning, Sonal.
Good morning, Nigel. I have 3 stocks on my radar today. Craftsman Automation, because the company has a board meet. This is on the 27th of April to consider and approve fundraising. So watch out for the amount and what the company will be using those funds for as well. Sudarshan Chemicals, the company has gone ahead and they have launched a new product, which is Sumika Gold. And it will be an effect pigment for coatings, plastics, textiles, and other segments as well. It will cater both to domestic and export markets. Lastly, talking about Lupin, they have received an establishment inspection report for Aurangabad facility, and US FDA has determined the inspection VAI, which was inspected from March 6th to March 15th. Thanks a lot for that. Well, let's do a quick recap of our top stocks. Stocks with positive news flow: 361, Cyient, DLM, MCX, Craftsman Auto, Sudarshan Chemical and Lupin. While stocks with negative news flow: Tata Consumer, Tata Elxsi, ICICI Pru and Nelco. But